Hey everyone, this is Steve Kick with the MMLA Connect podcast. Today, I have a very special guest, Dale Vermillion, here with me. Dale is the CEO of Mortgage Champions. He is the president and CEO of VCI Consulting and a founding member of Mortgage Professionals Providing Hope. Dale, it is excellent to have you on today. Thanks for coming along.
Great to be here, Steve. Thanks so much. Appreciate that.
Yeah. You've been in the mortgage industry for over 30 years now. Is that right?
42.
42. Okay. Can you tell us about, kind of your career and your journey, where it started and where you're at now, how you got to where you're at?
Yeah. So, I'm one of those reasons that I tell people all the time they should be in the mortgage business, because I started in 1983 as a loan officer and actually graduated high school in 1979, worked construction for 3 years. And a guy told me one day on a scaffold, you ought to talk a lot, you ought to be in sales. I don't think it was a compliment, but
Yeah.
I took him up on it, got a job selling pots and pans door to door, did that for a year and didn't want to do that for a living, and got an interview with a mortgage company. And shoot, high school graduate, no background, started as a loan officer. In a year, I was promoted to a branch manager because I was the number one loan officer in a 192 branch region. Did that for a couple of years, built 3 branches, got promoted to a district, ran a district of about 250 loan officers and about 500 employees, ran a region by the time I was 27. And by the time I was 28, I was running a national mortgage company with 2,300 employees. I mean, it's the only industry on the planet you can do that with no college degree, with no background, just learn the mortgage business from the ground up. 1995, my last corporate job, that was when I moved into training and consulting. I decided I didn't want to be in corporate America. I didn't like the politics of senior leadership, but loved coaching people, loved teaching people, had a knack for speaking, I guess. At least that's what people told me. So decided to do that for a living. And here I am 30 years later. I've trained 1.5 million loan officers and like 25,000 leaders and 800 companies. And it's a fairy tale come true.
It really sounds like it, honestly. You would say you have, I don't know if you'd say the gift of gab, would you say? Or would you say that you developed that more as time went on? How, was it always like easy for you to talk to people, or was that something that just, you kind of worked that muscle and got better at it over time?
It really was. But I'll tell you what really gave me the ability to do what I do as a speaker for the last 30 years is one of the things that I talk to leaders in the industry about all the time. The number one trait of top leaders and managers is they have an innate ability to coach people. They love to coach. It's in their DNA. They like to sit down with their people. They like to make them better. And that was me. When I was 19, I played semi-pro baseball for a year. Couldn't hit a curve, so I couldn't make the bigs. So I got out of that, decided, I love baseball. So I started coaching 5th graders, 9 and 10-year-olds in Little League. Wasn't a dad at the time. I was just a guy playing baseball and said, you know what? I can't play, but I can teach kids how to play. Yeah. And fell in love with that, then raised 3 sons that I coached them for the next 15 years. And I found that I loved coaching people. And as a leader, my goal was always to take people and bringing people off the street, train them from the ground up, coach them on the right way to sell, and just constantly build that. And that's really what helped me to become a really good speaker. The more you teach and the more you coach, the more you learn and the more confident you become. And speaking is nothing more than knowing what you're talking about at the end of the day.
Yeah. And, the longer I've been a loan officer, the easier it is for me to talk to someone about a mortgage, right? You just learn the ins and outs of it more and more as new situations come up.
That's right.
It becomes easier for sure. It's a practice. Definitely.
Yeah, repetition is the key to all success. There's no question about that.
Let's talk a little bit about your success, though, because your success isn't the normal success of every loan officer or someone in the mortgage industry. I mean, it was pretty apparent that early on you were coaching, I think you had 250 loan officers underneath you as, a 27-year-old individual. That's a pretty big accomplishment in and of itself right there. When did you know that you knew something different or were meant for a little bit more than how you started as I guess just a loan officer?
The thing that I learned early in my career that made all the difference is that the moment you think you're the smartest person in the room is the minute your career is over. I learned that early. I learned that there's 2 ways to succeed in life. One way is you try to figure it out on your own and you bump around and you get all bruised and cut and bloody and you're average at best for most of your career and you never really figure it out, or you seek out the people around you who are far smarter and far better than you, and you sit down and you ask them questions and you learn and you be willing to change and willing to take on the work that is necessary to adapt those things. I was very blessed that I started in 1983 working for a 25-year veteran, a guy named Sid Williams, who was one of my greatest mentors I ever had. And he taught me from the ground up. He just said, look, kid, you can sell. I know mortgages. I'll teach you mortgages. You teach me how to sell. That was the deal that we made. I was literally, when I worked for the pot and pan company, I was number 7 in the nation out of 7,300 salespeople. I could sell. I knew how to do that. Okay. But I didn't know nothing about mortgages. He and I worked together. And when I became a manager, when he promoted me up to my first branch, and I started to manage people, I realized, you know what? The key to success is simple. It's taking the best practices of the best producers, building a best practices methodology, and then learning from each other and growing together and constantly seeking the best behaviors and the best strategies that you can. And I've made a 42-year career out of that. I mean, I've trained 1.5 million loan officers. I've trained the best in the business. And when I sit down, I love to tell this story. When I speak at conferences, I've done over 7,000 speaking engagements in my career. So it's a lot of conferences and a lot of stuff I speak at. All right. When I speak at conferences or speak at a seminar, I'll walk away at a break and somebody will walk up to me and say, hey, I like what you had to say, but. And the moment they say but to me, Steve, I know I'm about to get the benefit of their wisdom. So I stop them and I say, okay, before you say but, which tells me you've got a way to do it that you think is different or better, I just got to ask you one question. How many loans you closed on average? I don't mean your best month ever. I mean, how many loans you closed on average? If their answer is 3, I smile and go, hold your thought. And I leave. I walk away. If they go, I'm closing 25, I'm like, okay, I got as much time as you want. You tell me everything you want to tell me. I want to hear what you got to say.
Absolutely.
We need to learn to surround ourselves with people who've earned the right to coach us, who've earned the right to teach us, to speak into our lives. We need to let people do that, but we got to make sure they're qualified and they got the credentials. I see so many people in coaching today. Many of them know what they're doing. A lot of them do not, to be perfectly honest with you. And I'm always saying to people, look, you make sure before you hire a coach or before you get trained by somebody, make sure you look at the life they've walked. Make sure you look at the credentials they have. Make sure you look at the integrity and the success that they've modeled before you ever consider letting them coach you. Seek out the best and you will become like them. That's just the way it works.
Yeah. I mean, I love that. It just brings up so many different points and everything you're talking about. It resonates. What you're doing now. So you've been coaching for 30 years now, I think it is, right? You just surpassed the 30-year consulting and coaching threshold now, which that plateau is pretty cool. So are you still originating mortgages, Dale? Are you still a part of originating loans? No,
I haven't originated for 30 years, but I'm working with companies and clients. We have about 30 clients we're actively working with at any given time.
Yeah.
And I'm in the trenches with those teams. I'm working with their executives. I'm working with their mid-level managers. I'm working with their loan officers and operations partners. A lot of times I'll go spend time in those locations with the people, actually among them, working with them on things. So even though I don't personally originate, I'm seeing the game all the time. I'm constantly updated on what's happening and the challenges and the trends out there all the time.
So what would you say if someone was starting as a loan officer today? Where would you tell them to start in this business? What would be your number one go-to or your first few steps, if you will?
Yeah, well, first and foremost, if you're going to start, let me give you a little bit of my strategy that I teach leaders all the time, Steve. Okay. I am not an advocate of hiring and recruiting experienced loan officers. I'm not. I never have been. Now, doesn't mean you can't get great people. You can. But for the 10 years, 11 years that I managed, I never hired an experienced person one time. It was always people off the street. I would rather have a clean slate to work with, train them from the ground up, no bad habits, and just show them how to do it. So that's always kind of been my mindset about it. Now, I train a lot of experienced people, but that would be my druthers. Now, having said that, the thing that I would do with those new people when they came in, the first thing I would teach them is how to be able to originate opportunities. You got to know how to do telephone sales. You got to know how to pick up a phone. If you can't take a phone book and create apps, you're not going to make it in this business. That's all there is to it. So whether that's calling on referral partners or that's calling on consumers, either way, we've got to learn how to be really, really good at communication in this industry. And Steve, that hasn't changed. You know, the problem in today's marketplace, if you were to ask me the number one problem in today's marketplace, it's simple. Loan officers are relying way too much on technology and not enough on human conversation and connection. That's the
Yeah.
number one problem by far. We're sitting in our living rooms waiting for it to rain dollars. That happened in 2020 and 2021. It may never happen again. 2020 and 2021 were the only 2 years like that in my 42-year career. But a lot of people came in those times and they're expecting that to be the norm. And they're
Sure.
waiting for that and they're hoping for that. And you can't do that. You got to understand, we're in a normal market. At 7% rates, we're in a normal market that I saw most of my 42-year career. So today, you've got to be able to pick up the phone and talk to people about how you can help them financially. Our industry isn't the mortgage industry. It's the money industry. That's the first thing that I teach new people in this business. Quit thinking about mortgages. Start thinking about money. How are you going to help your borrowers to build wealth? How are you going to help your borrowers to create affordability? How are you going to help them to own the American dream? That's the conversations you need to be having, not let me tell you about my mortgage products and price. That's the conversation 95% of loan officers make, and they all fail when they do it, especially in this marketplace. Because consumers don't understand our terminologies. They're overwhelmed by the things that we say. They see a mortgage as a complex process that the only thing they know about it is get the lowest rate, because that's what they see on the media.
Yeah.
And so that's where they go back to when you don't sit down with them and have a conversation and say, hey, Steve, let me tell you why I'm calling today. The economy's brutal out there. I'm sure your family's feeling the effects of it like my family. I'd like to talk to you about how I can literally help you save money today, create more cash flow, put some money in the bank, build some reserves, get out of debt faster, make sure we create tax benefits for you. I want to show you all of the things that I can do in my industry to help you and your family really build wealth and create security, savings, and stability in your life. That's the right conversation, but nobody's having that conversation today.
Where do I sign up?
Yeah, that's exactly right.
That was great right there. That conversation we just had, that spiel, that was perfect. Yeah. I mean, I just think what you're talking about, Dale, is everyone's talking about AI and technology, and it is important to embrace the technology, because it's what it is doing for us is making it easier to find the opportunities to connect with people as a real human being, right?
Right.
Because there's so many things being thrown at us all the time. I think it's important to embrace the pieces of the technology that allow you to reach out or make it easier for you to reach out. Hey, it's a birthday, or someone just listed their home. And those have been very important things, that I wouldn't necessarily know. Maybe you're following them on social media, but that's not every client. So these are big pieces of information that are being sent to us from a CRM or something like that, assuming you're using one. And it's allowing us an opportunity just to reach out and say, hey, looks like you listed your house, or your birthday just came up, or some sort of milestone or event. When you're getting that information put in front of you, you have to be able to utilize it, right?
Yeah. And I think you said the key thing there. The value of AI to a loan originator today is the marketing capabilities of it. But let me just say this, okay? For a lot of loan officers, AI is going to be just a deeper form of laziness. And I know that sounds really negative, but I'm just going to be honest about it. What I'm seeing a lot of loan officers doing is trying to figure out how to use AI to do more of their work. Yeah. You need to quit focusing on having technology do more of your work. Because if it's doing more of your work, then what are we paying you for? What is your commission check based on? Like, anybody can sit behind a computer and create technology that can do a lot of the jobs that originators and LOAs do today. And there's a lot of technology coming out that's doing that in the marketplace today. What we need to understand is we need to create value beyond AI. We need to bring the human element, the personal connection, the ability to be able to think on our feet with a borrower on the phone and have the experience to go, okay, I've run into a situation like this before. Here's the right product and program for that. Let me show you how this works so I can save you more money than anybody else. That's how you earn your keep in this marketplace. Again, high tech, high touch is what I say is always the key to success in this business. Yes, you got to be high tech, but you got to be high touch too. And if you're just focusing on tech, the number one mistake loan officers make today is instead of having a conversation, they're shooting links to borrowers and letting them self-serve all day long. Yeah. And then that borrower is just going and getting shopped and they're losing the deals. They're getting ghosted on their links. Well, of course you are, because there's no loyalty or trust established through a link. Technology does not build trust. Human interaction and connection does. It's critically important in this marketplace we understand how to combine new school with old school and put the two together.
Yeah. And, I've found a huge connection when I sit down and meet with people in person. I know that it's harder and harder, especially with physical distances for a lot of people. But, if you're a local loan officer, meeting with someone, shaking their hand and looking them in the eye and giving them that trust is, it's really something that I've started to fall back on more. If I can meet with people in person, they learn that they can trust me, and that I'm a trustworthy person. And to take that further, Zoom meetings or video meetings, I think bridge that gap of anyone who you can't meet in person. I'll admit, during COVID, I did 0 Zoom meetings with my clients. It was all over the phone. And maybe it was just because it was easier for me and there were so many applications coming along. But I realized soon after that, I started using Zoom so that I could see my customers, know what their face looks like, and also that they could see my face and know that they could trust me as an individual. I'll look through the video camera into their eyes, and build that trust. How do you feel about that?
That's exactly the right approach to take in this marketplace. It's interesting because one of the things that I've been teaching a lot of loan originators across the nation, and I'm getting feedback from top producers, they're using this and it's making sense, is you have a borrower who is going to buy a home. Okay. You've gotten a referral from the real estate agent. Why not have that first meeting at the agent's office with the borrowers, bring their spouse, bring their docs, because now it's a twofer. You're getting time with your real estate partner. You're getting time with your borrower. You're all connecting and building a deep relationship. And once that deal's done, it ain't going nowhere. They will not ghost you ever. It doesn't happen.
Yeah.
So these are the kinds of things. And I'm a firm proponent. I teach it all the time. Use Zoom. There is so much gained in seeing people and having that eye-to-eye contact and seeing the body language. When you say something that the borrower all of a sudden tightens up, hey, that wasn't the right thing. That was going the wrong direction.
What are you thinking about? What are you thinking
That's
about?
Right. That's exactly right. Or if it's a telephone call, you may not be able to sense that. And if it's just email, text message, and links, you have no clue. You have no clue what these people are like. Like, you build zero loyalty in that. You might get the deal, but you'll never get repeat business out of that borrower again because you're not creating anything that creates a human emotion towards loyalty. And loyalty is what creates repeat business. That's all there is to it.
And talking about having an agent, if you can, get an agent and their borrower together, not only you're also educating the real estate agent on the process, how it works, how you talk to someone, how you walk them through becoming a homeowner. So that's pretty powerful too.
Yeah. And I got to say this because I hear this all the time from loan officers. Oh, gosh, if I'm doing that, how am I going to close a lot of loans? I'm spending all this time out. And I remind them, let me remind you of something. Okay. Are you closing 15 loans a month every month? And they usually go, no. Would you like to? Yeah. All right. Let me remind you. The secret formula to 15 closed loans a month is 1 sale a day. That's it. 1 deal a day in your pipeline is 21 deals a month in your pipeline. There's 21 average days in a month. Now, having said that, 70% on those on average close. So you do the math. You put 21 in, 70% fund, 15 loans a month. What is your hurry?
Easy.
Slow yourself down. Meet with your borrower. If they're willing to drive to an office to meet with you and bring their spouse and their docs, do you really think they're going to ghost you and go somewhere else? Do you really think the seller's agent's going to unhook them? Ain't never going to happen. It changes the game.
Yeah. Man, you're just building that trust, and going the extra step and the extra mile. And even though it might take more time up front, it will allow you so much more time on the back end. It frees you up, to so many other things too.
Well, that's the other side.
Which, I want to touch on this. You talked about going from less than 15 loans a month to 15 loans a month. And when you start getting there and you realize the power of going to closings and showing up and meeting people in person, you have to start relying on the help that you have, right? Whether that be your processor or you hire an assistant, right? Do you feel like there's a certain point in a career for a loan officer where, you've studied it and it's like once you get to this production volume or whatever that you need to start delegating these other tasks to other people? Is there a formula for you on that, Dale?
There is. So, this is another common mistake, Steve, that I see in the marketplace is a lot of loan officers, some of them are coached this way, some of them just think this way. That the secret is I'm just going to go hunt and I'm going to hire people around me to do all my work for me. It ain't that easy. It don't work that way. You have to understand that when you're a hunter, which is the one of two qualities of a great loan officer. You got to hunt and you got to gather. The hunting side is going out and getting the referral partners if you're in distributed retail, or if you're in a consumer direct environment, it's making the calls to the leads or driving leads in through outbound calling. Okay, that's the hunting piece. The gathering piece is the actual consumer side of it. Here's the deal. If I go to if you're the realtor that I'm calling on, Steve, and I go out and say to you, I'd like to work with you. Here's all of the reasons why you should choose me and my company. What I know is if you say to me, yes, I want to work with you, you're saying yes to me. You want your customers to get me. You don't want them to get a low rendition of me. You don't want them to get somebody who has 1/10 the experience that I have. So what I see a lot of times is we go out and we drive in the referrals and then we hand them to somebody that is not near as qualified, and they drop the ball consistently on those deals. And then we're frustrated. Well, the reason that didn't work is because you didn't invest enough time with the consumer. So what I always teach the loan officers, look, you need people. Here's the deal. You got to get to 10 loans on your own before you even think about an LOA. Okay. If I was managing a branch, nobody gets an LOA unless you're closing 10 loans a month. Under 10, you can handle that on your own. Over 10, now I'm going to start giving you an LOA for every 10 or 15 you get to, depending on your performance. So if you're doing 30 loans a month, you probably got 2 LOAs. If you're doing 45, you got 3 LOAs. The bottom line is I'm going to wait to get there, but I'm also going to make sure that when those referrals come in, you are still connecting with the borrower first. You're doing that introductory 10 or 15 minutes to win them over, to build that trust. And then you're handing it to your LOA and you're training them to do it as well as you do it. That's the key to the game.
Yeah, for sure. And I think one of the short-sighted things that happens is people will hire help that isn't necessarily the help that they want, right? I mean, if you're going to hire an assistant, you want to hire someone that has some sort of resume of doing either that type of work consistently, but it is very helpful to have someone very knowledgeable in the industry, right? Because there's a lot of questions that come up from clients that are industry related, right? And you've got to have some of that industry knowledge in order to be,
or hire somebody like you. It's got your competitive spirit, got your positive attitude, got your good communication skills. Basically, it's like looking in a mirror. Okay. And then have them shadow you for 90 days. They will learn so much in 90 days, just working next alongside of you. And what happens is you're building your own sales team. To me, that's the better way to do it, because every time you hire somebody experienced, the challenge you always have is they leave a place they don't like. And then when they get to your place, they tell you how good it was that they left. It's always like, well, our rates were better. Wait a minute. You hated that place. Well, our culture was better. You hated that place. Well, the process was, you hated that place. I see it all the time. So when they don't have any comparison and they're just learning from you, then you become the comparison and they work much better with you in that environment. And you can you can basically replicate yourself. I've said to managers my whole career, the number one key to great management is replicating yourself. You became a manager because you were good as a loan officer. So just create yourself. Just replicate yourself through people.
Yeah. I tried that experiment, Dale. I hired an assistant at one point, and they had been in the banking business, working in commercial as an assistant, but no mortgage experience. The unfortunate problem that happened was she started, I think, 3 weeks before COVID hit. And my plan was to have them sit for several months and just listen to me and learn the lingo of the business.
Right.
And
that killed it.
About a week into it, I said, do you think you can submit an application? And she said, yeah. And we were kind of off to the races, right? And we don't work together anymore, due to a myriad of things that happened during that time. It was a tumultuous couple years for some of us, but that was my plan when I first hired that person, was to just have them sit with me for a few months, pick it up, learn as much as they can. And when they felt like they could have these conversations on their own, let them start working it that way. But, same thing. That's the idea, is you can train that person as long as you give them that training period, right? And you give them that time to figure it out.
Right. And it takes about 90 days, about what it takes.
Okay. Yeah. Yep. Same thing with a relationship, right? It's that honeymoon phase. Got to get through that first. So Dale, we got to talk about it. You came to the sales rally, the MMLA sales rally, gave us a great keynote presentation. So Just want to kind of go through a little bit of it. I think that one of the key things for me was talking about the mindset of a top performer. And this can be relatable to any industry. But can you kind of talk about how mindset factors into what we have going on here?
Yeah, well, we become what we think. And frankly, here's the bottom line. If I were to sit down with most people in the industry today and have a cup of coffee and say, tell me your thoughts about the industry, 70% of what they're going to say is going to be negative or more. In some cases, 95% of it's going to be negative. Oh, well, the rates are really high, and oh, it's really hard out there. And oh, man, the realtors this, and oh, well, the affordability problem this, and oh, the inventory problem this. And here's the bottom line. If everything that's coming out of your mouth is negative about the industry, how do you ever think you're going to be dynamic, charismatic, and convincing to a borrower or to a realtor as to why they should buy a home today? The first time they raise a rate concern, you're going to be like, oh, there it is. Okay, see, they won't pay the rate. Well, they will pay the rate because rates have never mattered. In 42 years I've been in the business, I was selling 17.5% rates in 1983, and I closed 37 loans a month. You tell me how much rate matters. And people were like, well, everybody was saying, no, they weren't. I was paying off banks that had 10% rates with a 17.5 all day long doing refinances.
Yeah.
Because I didn't care about rate. It didn't matter to me. It was about what's your payment, what's your cash, what's your tax benefits, how do I get you out of debt? Those were the things that I looked at. So the way we think and the way we believe, how we believe determines how we achieve. There's no question about it. And the more negative you think and the more that you become pessimistic about the marketplace, the less likely you're going to get anybody to want to listen to you or be a magnet that people would want to borrow from. It's just that simple. You have to understand. Look, I'm going to make this super simple for the audience, Steve. I don't care what rates do. You're never going to interview a fifth grader who says, when I grow up, I want to be a renter. Okay? That's just not going to happen. The American dream is home ownership. It always has been and always will be. Homeowners have 40 times the wealth of renters in the United States. Okay, so most people have built their wealth off of real estate. Everybody wants to be in it. No matter what rates do, people are going to buy homes. They're going to sell homes. They're going to downsize, upsize. They're going to deal with life issues. This is an evergreen industry. All you have to do is quit worrying about what the market and the rates are doing and ask yourself the question, how do I take this person and create the most affordability, the lowest possible payment I can with the absolute best cash in the bank, with the most benefits to the loan? How do I do that? And when you do that, you win. It's all about thinking the right way. Stinking thinking will kill you every time.
How can I help, right? How can you help that person? Whenever you think about doing something right for them, whether it be in the moment or, hey, maybe a mortgage isn't right for you right now. I've seen it. I've been a loan officer I'm on 13 years now. And I've seen it where people come back to you even when you didn't give them a mortgage, or they'll refer people to you when you gave them solid advice that didn't always end up with a mortgage per se, end up finding that business coming back to you in so many ways when you're just trying to help people and be genuine. So, besides, bulletproofing your mindset, right, which I think is the key to any successful entrepreneur, loan officer, business person, how would you say some of the affordability challenges that are facing home buyers right now? Like, what is the number one way that we can help home buyers kind of maneuver through, these affordability issues? And I know some of it's the conversations that we're having, Dale, but what would you say is the number one thing that we can help people overcome with those affordability challenges?
Well, the confusion about affordability is very simply this. Most people think affordability is a derivative of inflation. It's not. It's a derivative of debt. The reason people can't afford to buy homes today is because they got too much consumer debt. That's the problem. So instead of if you ask any borrower today, any homeowner who's looking to buy, how do you create the best affordability? They're going to answer all the same way. Put more money down. It's the wrong answer. Pay off your debt first. Debt load is where your problem is at. The average consumer debt, if you take $10,000 of consumer debt, any kind of consumer debt, car loans, personal loans, credit cards, put it all in a bucket, what you're going to find is the average payment on every $10,000 is about $275 a month. That's what people pay for their debt. Well, a $10,000 loan amount within a mortgage of a 25-year term at a 7.5% rate is only a $74 payment. So instead of putting $10,000 down on the house, why not pay $10,000 down on the debt instead? Eliminate the $275 payment, finance that $10,000 through the house by putting less down, and you pick up a $74 payment, you just created $201 in affordability for every 10 grand you pay off. It's the simplest formula on the planet, but it's the one nobody talks about.
Yeah.
That's where the focus needs to be.
And it's really just it's just educating people on how it all works, all of it, right?
Yeah, and do a budget. The number one mistake in the mortgage business is nobody does a budget anymore. I tell loan officers, you need to have a budgeting tool. You need to sit down with your borrower, and the first question you need to ask them is, what are you paying for housing today? Okay? And how much you have left at the end of the month? Well, I'm paying $2,500. Maybe I have $500 left. So you can't afford a payment more than $3,000. Don't ask me how much you qualify for, because if I just do a DTI calculation qualification, I might tell you you can afford $4,000 and qualify for that, but you can't afford $4,000 because you just told me you're paying $2,500 and you only have a little bit left at the end of the month. So let's get a payment you can afford. Let's do a budget and identify where your comfort level is, and let's back into the house instead of let's qualify you for the maximum you qualify for, and you go out and buy something you can't afford, and 6 months later you're in trouble and I put you there. I never do that. I always back into the payment instead of backing into the loan amount.
Yeah, for sure. And I mean, it's such a powerful tool to help people down the road too, right? If they, they may not understand it now or need it now, but if they understand, hey, down the road, I got into this car loan and I took out this thing to, fix the house or whatever, that you can capitalize on the equity that you build from the home too down the road.
That's right.
And that's a huge, I think, opportunity that we don't necessarily talk about when we're purchasing the home, right? Is how big of a difference it is that you're paying that mortgage down, the home's appreciating, and now you've got equity that in case you need it, you can tap into it, right? We hope that we don't need to, but it's there. So
very good.
Yeah. You I think you called it code, right? Cash out debt elimination.
Yep. Gotta crack the code.
Yep. And I think that's going to be a huge thing over the next few years here as we continue to see, just where the economy goes and how things end up with that. But you talked about putting the pedal to the metal and leaving the competition behind. That was kind of one of our things for the sales rally: adapt, innovate, and create. And I took a quote from you. I'm trying to find it here. I think you said this: creativity may well be the last legal, unfair, competitive advantage. Is that a quote from you, Dale?
Dave Trott said that. It's a great quote. Dave Trott said that it is the last legal unfair competitive advantage, and I believe that's true. I believe it's absolutely true.
Can you expound upon that a little bit by what you mean?
Yeah, just don't be like anybody else. Literally, we do shopper calls all over the country. So last year we did shopper calls in over 800 loan officers in the U.S. 95% of them sounded identical. It was the same rhythm for all of them. They get on the phone. First off, only 3% said thank you to their borrower, believe it or not. 3% out of 800 plus. 24 people said, Steve, thank you for taking the time to talk to me. Or thanks for the opportunity to work with you. Or thanks for working with my realtor partner. I'm honored to be able to help you with your mortgage. 3%. Start with gratitude, number one. Second, almost none of them had a value proposition. Everybody went straight to qualifications. So Steve, you're looking to buy a home. So how much do you have to put down? And you know what your credit score is? Are you kidding me? We are 14 seconds into a call with a total stranger, and we're asking them what their credit score and their down payment amount is. That makes absolutely no sense. You got to be different. You got to get on the phone and you got to begin with a value prop. Give them 5 reasons why they would choose you. Right from the get-go. Hey, Steve, thank you so much for the time. Let me take a minute and just tell you 5 reasons why you might want to work with me and what we offer that other lenders don't. And bam, you hit them right there with speed of service and ease and efficiency and the way you're going to save them money in other ways, the way you're going to show them options nobody else is going to show them. Give them 5 reasons why you are different. And what'll happen is the call's over in 3 minutes because they've never heard this from anybody else. Everybody else, it was a Spanish Inquisition and an interrogation. With you, it was a conversation loaded with benefits and reasons why I should work with you. That's how you leave your competition in the dust, is you don't sound like them. You sound like somebody who cares about their borrowers, who's interested in helping them win in the marketplace today, and who really has something to offer that's unique and different.
I love that you kind of started with the gratitude thing, because I personally believe that, especially for me, waking up every day, I try to start my day with gratitude. And
Good.
when you start your day that way, it's a pretty good way to start your day, right?
Powerful. Yeah.
So I'm glad you touched on that. Everyone knows Dale Vermillion, the mortgage pro, the sales pro. Can you tell us a little bit about, the real Dale Vermillion? What do you do outside the office? What's your why? What keeps you going? Can you give us a little bit?
Well, first, Dale Vermillion wouldn't be Dale Vermillion without Laurel Vermillion, my bride of 33 years. That's number one. We are parents of 4 great kids. You know Jake, who
Yep.
works with me, and Jessica, maybe, who works with me. But we have 4 incredible kids, 4 grandkids. Our why is simple. Our why is to help people. I've got my Others First T-shirt on. It's our slogan at Mortgage Champions. It's what we build our whole company around. It's based on my life verse out of the book of Philippians, chapter 2, verses 3 and 4. It says, "Do nothing out of selfish ambition or vain conceit, but in all things with humility, value others above yourself, looking out for their interests, not your own." That's my corporate philosophy. That's my life philosophy. That's my business philosophy. That's my leadership philosophy. If we're in this for ourselves, we're in it for the wrong reason. We should be here to help people. And we believe in giving back in droves. We believe that the majority of the income that we make, the profits we make, should be given to others, not used for personal gain. So we live a fairly humble lifestyle, and we love to give, and we love to share, and we love to help people, and we love to do missions work. My wife and I have been all over the world. We built an orphanage in India that we've been there 10 times. We fund a school in Guatemala for kids that live in garbage dumps. We believe in helping others who can't help themselves. That's what God put us on this planet for. That's what our why is. It's really simple. It's to help others. And at this point in my career, Steve, to be honest with you, I'm more about helping people build their career than about making the money. Just like to help people build success so their families can be successful and live fruitful lives.
What a powerful example of leadership, though. It sounds like, you always had it right. Helping others first, as your shirt says. You've kind of led with that, and it's always helped you probably stay the course. And looking at just what you've been able to do, and even with your kids being involved in the business, that's pretty special. I've gotten to know Jake, and he and you. I think I may have corresponded with your daughter potentially, but I don't think I've met her quite yet. But you guys are salt of the earth people, honestly. I met you and Jake for the first time at the sales rally, and nothing but warmness and gratitude for being there and showing up from both of you. Very personable. And even with this conversation here, it's been very easy to talk to you. So it's easy to see why you have continued to be successful, because you care about others, because you're a good person. And damn, it's pretty easy to talk to you too, Dale.
I appreciate that.
I don't know if it's just because you're such a great salesman, but it's pretty easy to talk with you. So I appreciate that.
I'm just a guy. I mean, we're just a couple of guys hanging out with each other, and that's it. Like I said, the minute we think we're the smartest person in the room is the minute we're in trouble. I've been blessed. God has been so gracious to our family and to me. All I can do is pay that back with gratefulness and just give back to others. That's it.
We want to be looking at getting in the rooms with the smart people, not trying to be the smartest person in that room, right?
That's right.
So
that's exactly right.
I've always agreed with that. So before we go here, I always like to leave our listeners, Dale, with one thing, one positive spin, or one, influential thing that can help uplift our listeners. So what can you leave us with, Dale?
So here's the deal. Quit talking and focusing on and thinking about mortgage rates, mortgage products, mortgage programs, and remind yourself of this one truth. There's no industry that is like the mortgage industry where you can impact people's lives in such a powerful way. We help people attain the American dream. We help people improve their financial situation and their life. And why is that important? Well, I'll tell you the reason why it's important. If you look at statistics on things like suicide, drug addiction, alcohol addiction, and depression, guess what the number one reason for those 4 things is? Financial stress. We're not in the mortgage business. We're in the business of helping people. We're in the business of creating an American dream for people where they can have a home that they can raise their family in that is safe and protected and creates wealth over time so that they can create a safe haven, a place that you can create memories and create life with. This is what we do. And we will always be able to be successful no matter what the market does. Quit worrying about the intrinsics of the market. As I always say, quit majoring in the minors. Major in the majors. Focus on the end result of what you're doing for people and quit worrying about all the details that get you there. Just talk to people about how you want to change their life, and then sincerely do that, and you will be successful for the rest of your career. I've made a 42-year career out of this industry. And you know what? Everybody watching this could do the exact same thing and have the same successes and the same, memories and the same wonderful opportunities if you just quit thinking of it as a business and start thinking of it as a way of life and a way to change others' lives. That's the key to the game.
I love that. It's been an enlightening conversation. Truly thankful for all that you've given back to us with this podcast and also coming to the sales rally. We look to be connected with you more. And anybody who needs the best of the best, reach out to Dale. I know that their training is top notch, and you'll continue to be an important piece of the mortgage conversation and the sales and professional conversation for many years to come. You got family looking to possibly take over the business. So I think we're going to see the Vermillion name around for quite a while. But we appreciate you taking the time, Dale. Thank you for the listeners out there for tuning in to the MMLA Connect podcast, and have a great day.
Steve, thank you. You're an awesome guy, nice guy, and I just really enjoyed being with you. God bless you.
Thanks again, Dale. We appreciate you so much. Take care.
You too.